Good morning and welcome to Dark Gamma's pre-market analysis. I'm Samantha. It is Wednesday, March 25th, 2026, and we are coming in hot this morning. The SP 500 is trading around 6,619, which means we are gapping up roughly 63 points above yesterday's close of 6,556. That is a bullish open of nearly 1%, and right out of the gate, the bulls appear to be in control. The key question today, Billy, is whether this gap has the legs to hold or if we see the market fade back into range.
That's exactly the right question, Samantha. And when we layer in the options structure, the picture gets really interesting. Max Pain is sitting at 6,670, which is actually above where we are trading right now. That tells us there is still gravitational pull to the upside from a gamma exposure standpoint. The market makers would benefit from a drift higher toward that 6,670 level, so do not be surprised if we grind up through the session.
Now let's talk about the expected move, because this is where traders need to anchor their thinking. The options market is pricing in a move of roughly 41 points in either direction today. That gives us a range floor around 6,515 and a ceiling near 6,597. Here is the catch. We are already trading above that entire expected range on the open. That means we are in what Dark Gamma would flag as an extended zone, and implied volatility participants did not fully price in this morning's strength.
Trading above the expected range this early is a real signal. It either means we see continuation with momentum buyers chasing the move toward max pain, or we get a snapback as hedging activity kicks in and the market reverts back inside that 6,515 to 6,597 band. Personally, I will be watching how we behave around 6,597. That upper boundary becomes a magnet and then potentially a ceiling if the move stalls.
On the sector front, communications is the clear leader this morning, up just over 1%, and that is being turbocharged by the Magnificent Seven names. Alphabet is up nearly 2/3%, Meta is contributing, and Tesla is the standout of the group, up over 1%. Even the more conservative names like Microsoft and Amazon are showing solid green. The breadth within megacap tech is genuinely strong this morning.
The weak link worth noting is consumer staples, which is down 0.5%. That is actually a risk-on signal in disguise. Money is rotating out of the defensive names and into growth and communications. When staples lag on a gap-up morning, it typically confirms that this is not just a short-covering rally. Participants are genuinely repositioning into higher beta names.
So here is the Dark Gamma playbook for today. Bulls want to see price hold above 6,597 and push toward max pain at 6,670. That is the path of least resistance if open interest structure holds. Bears need a rejection at current levels and a close back inside the expected range to regain control. Either way, today is a high conviction setup with clear levels to trade against. Stay locked in, manage your risk, and we will be watching every tick. Back after the open. On the economic calendar, there are no high-impact data releases scheduled for the United States today.
A quiet macro day. Focus on institutional flow and key technical levels on S&P 500.
The Magnificent Seven are broadly green in pre-market, with Tesla leading the charge up 1.17% to 390.12, setting a constructive tone for the tech sector heading into the open. The moves are modest but uniform, suggesting broad risk appetite rather than any single catalyst driving rotation.
Tesla is the clear standout, and it's pulling away from the pack. Apple is the laggard, barely up 0.13% at 253.82, which tells us institutional money is favoring the higher beta names this morning. Nvidia at 0.47% and Meta at 0.21% are also trailing, hinting at some selective positioning rather than a blanket tech rally.
Worth noting that geopolitical risk is quietly in the background. Reports of a strike on an Iranian naval base could introduce volatility into energy and defense sectors, which may indirectly pressure sentiment if the story escalates during the session. For now, tech seems to be brushing it off, but traders should watch how the SP 500 futures react closer to the open.
Microsoft up 0.76%. and Alphabet up 0.65% are holding the middle ground solidly, which gives the group a healthy foundation. This isn't just a one-stock story. Overall, the tone for tech is cautiously bullish, but with Apple and Meta lagging, the rally lacks the full conviction you'd want to see for a strong trending day.
This morning before the bell, all eyes are on PDD Holdings, a $136.6 billion consumer cyclical giant with a beta of 0.81 and an expected move of 6.8%, making it the dominant name to watch today. Paychex and Chewy are also reporting pre-market, but carry far smaller caps and more muted expected moves of 2.8 and 9.7% respectively.
That 6.8% expected move on PDD is significant given its size, and the relatively low beta of 0.81 suggests the market sees this as a more contained swing than a pure momentum name would deliver. Traders will be watching whether the print pushes price through the upper or lower band of that implied range to confirm directional conviction.
After the close tonight, Carmen Holdings stands out as the highest beta name in the session at 1.43, with a 5.2% expected move in the industrial sector, while C-Star Medical and JBS round out the evening with quieter setups. Carmen is a smaller cap at $13.5 billion, but that elevated beta means gamma exposure around the strike clusters could get lively into the print.
Looking ahead to tomorrow morning, Pony AI grabs attention with a beta of 2.51 and an expected move of 9.7%, though its 3.9 billion cap limits the broader market impact, and Commercial Metals at 7.1 billion with a beta of 1.25 and an expected move of 3% is the more institutionally relevant pre-market mover for the SP 500 Industrials and Basic Materials Complex.
The IDF strike on the Iranian Navy base is going to weigh heavily on risk sentiment at the open. We could see a flight to safety push the SP 500 futures lower by at least 0.5% in early trading.
Agreed, and the energy complex will likely gap up on that headline alone, since any escalation in the Strait region threatens supply routes and traders will price that in immediately.
On the crypto side, SUI is sitting at a critical inflection point. If it clears 99 cents, the technical setup points toward $1.15, but geopolitical risk off could actually suppress that breakout attempt today.
The China-EU diplomatic language from Premier Li is a subtle positive for multinational exposure, but with the Middle East headlines dominating, market makers will likely keep gamma exposure elevated and 0 days to expiration open interest unusually high as traders hedge against further escalation.
An IPO, or initial public offering, is when a private company sells shares to the public for the first time, allowing everyday investors to buy ownership in that business.
So it is basically the moment a company opens its doors to Wall Street and gets listed on a stock exchange for open trading.
Exactly. And today we have one company making that move with Maywood Acquisition Corp., 2 listing on the NASDAQ Global Market under the ticker MYXXU.
They are offering 10 million shares at $10 each, which is a classic blank check company structure designed to raise capital and later merge with a target business.
Looking at the SP 500 with spot at 6,619, the nearest call strike with the heaviest open interest is 6,800, sitting at 15,348 contracts. And that open interest exploded 1,901% overnight, signaling aggressive fresh positioning well above current price.
On the put side, the nearest meaningful cluster is at 6,335 and 6,325. Both seeing massive overnight open interest surges of 2,935% and 904% respectively, suggesting dealers are hedging a potential flush toward that 300 handle zone below spot.
That call wall at 6,800 acts as a hard resistance ceiling today, while Max Pain sitting 50 points above spot at 6,670 creates a gravitational pull that could keep price pinned in a relatively tight range through the session.
The put-to-call ratios across all 3 nearest expiries are running above 1.25, with the March 26th expiry at 1.829, so the gamma exposure skew is leaning defensive and the 6,335 to 6,325 zone should be watched as the key support shelf if spot loses its footing.
So the SP 500 spot is sitting at 6,619.7, which puts us just above the gamma flip level of 6,615, meaning dealers are in positive gamma territory and will act as a stabilizing force by buying dips and selling rips.
Right, and that gamma flip is the key line in the sand today, because if spot falls back below 6,615, dealers flip to negative gamma and start amplifying moves rather than dampening them, which could accelerate any sell-off quickly.
The call wall at 6,645 is the next major resistance level, where massive open interest in calls creates a ceiling, as dealers hedge by selling the underlying into strength, making it very hard to push through on 0 days to expiration.
Meanwhile, the put wall at 6,580 acts as a floor of support. So for the open, we are essentially pinned in a range between 6,580 and 6,645, with a slight bullish lean as long as we hold above the gamma flip at 6,615.
Let's look at the levels where institutional players have concentrated the most liquidity. In the annual analysis, the dominant level is the 6,721 level, above current price, with maximum liquidity concentration over 27 sessions.
These levels represent zones where the highest institutional liquidity has accumulated over the past year, making them key support and resistance areas for SP 500.
Over the past week, the level with the highest active liquidity is the 6,715 level, above current price, with maximum liquidity concentration over 2 sessions. Recent activity confirms strong institutional interest in this area.
When price approaches these levels, watch the market's reaction closely. These are zones where major players have left a significant liquidity footprint.
If you want this level of market intelligence every single day, join Dark Gamma right now. Bots working for you, whale levels, real-time institutional positioning, opportunity scanners, and gamma exposure updated by the minute. You also get access to institutional liquidity and options levels for any ticker, ready to drop directly into your TradingView indicator. Exactly where institutions are positioning. No noise, just data. Dark Gamma is the edge that separates winning traders from the rest. The information that moves the market in your hands today. The link is in the description. Click it now. We'll see you on the inside.